The government just announced that they want to cap interest rates on credit cards at 10%. If you want to know what sectors and what stocks that could potentially impact in the market this week, then stay to the end of this scan. I'm Chris with Investors Underground, and this is Sunday Scan. Every single week, we go over the most in-play themes, news, and stocks to help you prepare for the week ahead and to build trade plans around that. So make sure that you like, share, and subscribe, and to stay to the end of this video. So a bunch of news came out over the last couple of days, and basically it revolves around the government interfering with markets in order to basically impact policy and affordability. That's kind of like what it's being spun as. So how does that really impact these different sectors? We've seen this recently with defense names, we've seen it with housing stocks, and we've seen it most recently with credit card companies over the weekend. So I'm filming this on Saturday night. By the time the market opens on Sunday, we should have a pretty good idea of what stocks are moving once we have the 24-hour markets open and futures as well. But basically, it comes down to a few simple things. Like we talked about last week with the Venezuela news, the market has a catalyst, something that detaches price from stability. And as the price is trying to find its new valuation and the stocks are moving, that is a dream for traders. And so whether the stocks are moving up or down, as long as they're in play, we can have a better chance of being able to trade them successfully as long as we have strategies that capitalize on those. So before we get into Sunday Scan for this week, I'll give the disclaimer now that I'm not a financial advisor and these are not buy or sell recommendations. Everything I'm going to talk about is for educational and informational purposes only. Before we get into Scan though, just a reminder that Traders for a Cause, the large charitable trading conference that is great for networking as well, is coming up at the end of February, and tickets are still on sale. Make sure that you grab them because every single year we sell out. Everyone in the trading industry that tends to be around on social media attends this event. It's a great place to meet people. It's a great place to meet a pod or a group of traders, especially if you're newer, if you're looking for people to connect with. But then also there's a lot of industry veterans as well. Giving presentations, panel talks. I'll be hosting some panels there as well. And then it's a great way to just catch up with all the people in the trading community. So like always, we will link tickets to that in the comment section, as well as the full written scan for Investors Underground. So let's get into a couple of the topics for this week. Like I mentioned in the intro, the big news over the weekend is basically Trump came out and said that the government wants to try to cap credit card interest at 10%. Basically, credit cards can charge anywhere from 20 to 40% interest or around there. And, the whole kind of policy agenda is that that's not really fair. And then people are saying, well, if you kind of lower the interest rates, or force companies to lower the interest rates, then you'll just have less credit. But really what we care about is which stocks can this impact and why. So there's a few things to take into consideration with news like this. One is that we don't know the fine details, and so it could manifest in different ways. So like I mentioned with the Venezuela news, we might not know what is exactly going to go up and what is going to go down, but we do have a good idea of what will be in play. And then from there, we can use volume and price action to basically differentiate what is getting a positive catalyst versus what is getting a negative catalyst off of this news. And as those things get repriced, we can then put those on watch for a trade plan. So we're going to pull up a couple of charts and go over some thoughts about this and really what to focus on. So I'm going to pull up my chart now. And the first name I really want to kind of discuss is this COF. So this is basically in the credit card industry, there's people who cater to different demographics. Some cater to more the high-end market, and that's companies like American Express. There's other companies like Synchrony and like Capital One that cater to more average or below average credit. And so basically you have a whole ecosystem of credit providers in there. And then you also have kind of the payment rails for that with Visa and MasterCard and everything. So with news like this, if the government were actually to try to cap interest rates on credit cards, first of all, there'd be a couple of things. One is that it could probably not do that retroactively, because when people sign up for credit card agreements, they're usually agreeing to and signing on the condition of borrowing a certain amount or having the ability to borrow a certain amount at a certain interest rate. And so to retroactively change the interest rate on that, that would kind of interfere with the contract that the company and that the user had in the meantime or in the first place. So if they were to basically impact the credit card interest rate, that would most likely take place on a forward basis. So as they're issuing new accounts or, from this point on or past a certain date, maybe that's something that they could do if they could actually get it lowered. But the way that that spills into the credit card companies like COF could be that if they have to lower interest rates, then that basically can reduce profitability for the company. So that could hurt a couple of the credit card companies, especially like COF. And you can see this has had a big run up recently. And so this could be ripe for a big gap down and a mean reversion, especially as that news is kind of filtering through. Now, what we've seen in the market recently, especially with some of the defense names and some other ones too, like the housing stocks, is that a lot of times we'll get a big kind of dramatic headline, and then shortly after they'll walk it back or they'll give some more context. So while the headline is still in play, that can have big downside pressure on some of these companies. Be aware that it's just one tweet or one headline away from reversing it, and we saw that recently with a name like LMT in the defense name. So last week, you basically had a big catalyst of Trump saying that he doesn't want to see a bunch of dividends and buybacks from these defense companies. He wants the money to be reinvested into production. And then shortly after that, even an hour or so later, that is when Trump announced that he wants to up the defense budget from $1 trillion in 2027 up to $1.5 trillion. And so, big pressure on that first headline down, and then a counter trend headline, within an hour. And so this is the kind of action that we're seeing in the market right now. And so it's a time to basically get on the right side of a trend, but have your finger on the trigger if and when that trend changes. So a couple of tips that I use in a market like this is one, especially if I'm trading things like options, is that I'm trying to make the position free or de-risk it as much as possible. So let's say I had puts on LMT and I caught a piece of this move, or maybe after this initial bounce, I was able to enter puts. If I got a good entry and if the puts were working, maybe I got a double on them, I would sell half and try to de-risk that position. That's one way to stay a little bit safe from these headlines. And another way is just to use trailing stops. Now, if you do get a counter trend headline, those can be really great opportunities to go long. So that same type of action that we saw with LMT, I think we're going to see a lot of that this week in names like COF and others. Now, COF might be one of the names that gets hurt by this kind of policy or this kind of headline, but there's other names that could potentially be benefited. We don't know for sure, but they will most likely be very in play, which just means that they'll have more attention, more volume, and more range. And a few names that fall into that category are AFRM, because if you think about it, credit cards are one way for people to get liquidity or one way to get access to capital, but there's other ways, and things like AFRM, or even like certain types of payday loans, while they can still have higher interest rates and things like that, they might not fit into the credit card structure, so they might not be impacted. So you could actually get a positive catalyst or a positive reaction to that catalyst in names like AFRM and possibly DAVE and some others, and even SoFi. Again, the market will kind of sort through the terms and as we get more details on it, but these are a couple of names that are going to be most likely very in play on Monday, and we'll be able to get some good reads on that as the market opens up on Sunday night with futures and with the 24-hour markets as well. So, and part of this whole kind of effort, whether it's with the housing stocks, which we also saw, and I'll get into in a minute, or with the credit card companies, is that coming up into the midterms, there's going to be a lot of policy attention around kind of the affordability narrative. And so Trump is going to meet with the healthcare executives pretty soon. And I think we're going to have a very similar thing play out with names like UNH, where I think the government will come in and say that they're going to cap rates, or they're going to cap some kind of profit markers on those companies. And so I think we're going to have a pretty negative reaction, or we could potentially have a negative reaction off the bat in names like UNH and some of the healthcare names too, going into that meeting, because now that Trump is kind of going around and, talking to these different companies and kind of setting these, rules and boundaries or these ideas, I think that the market's going to start to price in what sectors are likely to have kind of a big disruption or dramatic headline around them. So I think that healthcare will be one of those sectors that will also be in play as people anticipate possibly capping, the amount of profit that they can get from, certain policies and things like that. So onto the housing stocks. Very similar things. So the government essentially did two things last week. They announced that one, they're going to try to limit the amount of institutional investors that are getting into the single family home market. And the other thing that was announced is that the administration asked representatives to buy up to $200 billion of mortgage bonds. And so basically all that is in an effort to make single family homes more accessible to people. That's kind of like the thought process behind it. Again, we just care about this from a market perspective and how it could potentially impact stocks. So we saw some big reactions on names like RKT. basically, rocket companies. So these are companies that if single family homes, if individuals become more active in the housing market, these are names that would most likely benefit from that. And then you also have names like LEN, which are also impacted by that, and you can just see the strong reaction. So, this is an interesting market because it's so headline driven. I think it's a really good intraday trading market, but I don't think that you're necessarily going to get these big smooth trends without volatility along the way. Yes, over a couple of weeks or a couple of months, you will likely have some big trends unfold, and you've had some great ones in like the memory sector, things like SNDK recently, and things like MU. If you take a look at these are beautiful kind of swing trading patterns, and we actually had, these were on watch for myself as some of the top names, into the new year, kind of the memory sector with supply constraints there. This had a beautiful kind of base and a breakout. And then we actually caught the mean reversion here in Investors Underground. And then I actually turned this into a bounce trade, but I sold it too early. So I actually caught this really nice mean reversion on, I played MU for that on the day that the memory sector was coming in. But then when it came for a bounce trade, I went to SNDK and I gave it one attempt about right up here, and I got stopped out the low a day, which it's no big deal with these kinds of setups because your risk is so tight. You might be risking 50 cents a share or $1 a share or something like that. And if you're right, you can make huge amounts relative to that risk. So I ended up having a really nice entry in here. I actually got right around 312, 310 or something like that, right around the bottom, kind of using the trend line, the right side of the V kind of thing. But what happened is that I got calls on this bounce, like in order to express this bounce trade, but it was taking a while. And so while it ended up becoming a monster bounce, especially into the next day, and those calls, would have gone, they did go 10 or 15x from that. At the time, I was in the calls, but it just took a little bit too long. And I thought that it was a sign of weakness as opposed to it needed some time to consolidate. But you can see what happened after on SNDK. So that was the initial reaction. And then, of course, after I put my attention elsewhere, it started to run pretty hard. And then it gapped up huge on Friday. And so that would have been a monster trade. But you know what? That's the market. And, you try to take in all these variables and you never exactly know what's going to happen. But it's good that, we were focused on the right entry for that. We were focused on a good vehicle to express that trade. But it just happened that it took a little bit longer. And, sometimes you catch them, sometimes you don't. No big deal. But the main thing is to keep risk in control. So with these companies like SNDK and MU, I think we're going to have some more continuation to the upside until these get way overextended. If these had not mean reverted like this candle here or this candle here, I would have these on watch for a mean reversion trade into the upcoming week. But these flushed out a lot of the leverage, a lot of the longs on this move. I mean, this was like a 12% dip or so, if not a little bit more. And so that was a significant shakeout. And so what happens is that if you have a huge shakeout in a name like this and it soaks, that's a sign that there's still huge demand. And now it's less crowded on the long side because a lot of longs just got shaken out. So these types of moves tend to have a lot more longevity than other ones than you would think. A couple other names that I want to go over, and we're tying this into basically what is going to be in play in the week ahead, talking about what sectors are the best to focus on, and then building individual trade plans, whether you're going with the trend or whether you're looking for a counter trend kind of catalyst there. So we went over SNDK and MU. Baidu. So this is one that I tried the thesis from last Sunday's scan was basically that I thought it was going to gap up and basically stall out here. And it did, but the problem is that it gapped down to open. So it didn't offer really a great entry to it. It just kind of gapped down and slowly grinded up towards the day. But now on a longer time frame, you can see it starting to do that move where it did gap down, it recovered, now it's down again, and it just rejected there. So this could potentially be on watch for some more fade into the week ahead. And Baidu is very focused on Chinese AI and some of the they're spinning off some companies there, and so that is part of the reason why it was up so much. But now it's time, I think, for it to settle down a little bit. But I'll be looking at things like group strength or group weakness with the Chinese names to confirm that. So CRML had some nice trades on this one last week. So this is basically a critical metal stock or a strategic metal stock, basically with ties to Greenland. Greenland is meeting with the U.S. this week. And so basically, the U.S. wants Greenland under its control. Again, most of these headlines are just government headlines in the market right now. Again, we just care about it from a market perspective. But basically, you have some officials from Greenland meeting with some officials from the U.S. this upcoming week. And so if this is one of the only proxies or the only ways to get real exposure to the Greenland thesis, then this could be very, very crowded on the short side. And, we've had a bull bias on this one. Basically for the last week or so. And I had some nice trades on this. I had some calls here, but I think that this is going to continue to trend up until you maybe get a major blow off move, maybe into that catalyst of the US and Greenland meeting. And I gave some thoughts in Investors Underground, basically of why I think something like this can run so much. And we saw it the last time it ran too. When you have, there's certain situations where you have a theme in play and there's very limited ways to play that. And that can give something an extra concentrated amount of demand. So what I mean by that is if you were to go back and, look at Tesla in 2020, when it had its huge run, there were things that were in place that really made that stock stand out. There was a limited amount of ways to play like a real EV kind of a boom. And so Tesla was the go-to name for that. Now, eventually, like Rivian and all these other companies kind of came along, and as the sector got more and more saturated, then it kind of like spread out. But in the beginning, it was really a story about Tesla. And that was one of the main ways that all these companies or all these funds that were trying to invest in that theme, they congregated to Tesla because that was the main way that they could really do that. And then you had a similar situation in 2020 or 2021 with the crypto stocks. Most people could not just outright buy Bitcoin, like fund managers and everything, because there were still a lot of restrictions. So everyone went to the crypto miners when there was just maybe 5 of them or 10 of them or something like that. So again, you had major moves in 2020, 2021 in the crypto miners because there was a limited amount of ways that market participants could really play that theme. And then over time, you had things like MSTR, and then now there's hundreds of crypto names, and so it's so spread out. And that's actually a big weight on the sector now, in my opinion, why that Bitcoin has struggled, because you have all these names like MSTR and BMNR and like all these things that are basically, they helped it on the way up when it initially was running, in 2025. But then after, there was a glut of buying by the institutions and that slowed down, then that basically is weighing on it now, in my opinion. So basically the same thing is happening here in CRML. There's a theme of that the US is most likely going to work out something with Greenland, but the problem is that there's very few ways to play that. So all that demand can get concentrated into a pretty small stock. I mean, it's got, billion, 2 billion market cap, but in the universe of stocks and equities, that is very small. So if you have all these funds and, hedge funds and fund managers basically looking for a way to get exposure to the Greenland theme, they're almost all forced into a stock like this. And that's why you can have these big supply demand imbalances where you just have candle after candle after candle after candle buying. And you saw a similar thing when there was Greenland headlines last year, for a period of time, along with the critical minerals and the rare earth metals. So I think we're going to have another kind of similar run to this. And I think that's going to be coming up possibly into the week ahead. I think over the next couple of weeks, this will likely play out, but it just really depends. Maybe we get it all at once and this happens in a very dramatic fashion, or maybe this is a more of a slow burn. But either way, I think that, I have more of a bullish bias on this as long as that theme is in play until, the company either drops some more offerings or things like that can slow down that theme. IWM, another one. So this is the small cap index, and it basically tracks a lot of the smaller companies in the Russell 2000. And so this is a good environment for small caps for a couple of reasons. One, we got recent economic data that the jobs market is still slightly weak, like just slight enough, not enough to basically cause recession fears or anything like that, but just enough that the Fed can likely still cut interest rates at some point in future meetings. And so it's like a perfect environment where you have a lot of government spending, you have interest rates that are still probably going to come down a little bit, and you don't have major inflation. So we're in like a Goldilocks situation in the market. And a lot of times that money filters into things like IWM, and sometimes it filters into things like Bitcoin, but really silver and gold have been the go-tos as a kind of the inflationary play while Bitcoin consolidates after the debacle with MSTR and all these treasury companies loading up. If they were the main source of demand for it, and then they basically, have to stop buying as much. And so MSTR went from buying, billions and tens of billions of Bitcoin to now maybe once a month they're announcing, $500 million worth of buying or something. It's slowed down so much. So there's a big overhang. So I think that a lot of the money that was in crypto over the last 6 months really moved into gold and silver as a way to express that inflationary, deficits growing trade, as opposed to Bitcoin, which has historically had that over the last couple of years. So I think until that kind of balances out, I think gold and silver are kind of the go-to sectors for that type of thesis. Another thing on watch is this ONDS. So after Trump announced the increase, or the proposed increase, the increase that they want in 2027 to the defense budget, a lot of people are saying that, okay, that will filter into drone companies and anything defense related. And so these have been running like crazy over the last week. But I think, looking at some of these technical signals, like these hard rejects, and then we actually had, I think, an unconfirmed report on Friday that, there were some headlines around Chinese drone companies being able to enter the U.S. market. So if that is true, again, I'm not sure if it is, but that can be a big negative catalyst for things like ONDS and all these other U.S. kind of based drone companies, or, at least non-Chinese based drone companies, because the Chinese companies could potentially take market share from those. And so especially after a big run up like this, you could have a counter trend catalyst, something negative for these companies. And if you have that combined with the technical signals, then that can be a good sign that you could have a big move to the downside coming up on those. BE, love this name. So we were trading this a lot last year, and then it really had, this big head and shoulders move down here. We traded this on the short side as well, or with puts. And now this is finally recovering. And this actually reminds me a lot of SNDK, of kind of the move that I think could potentially happen. So if you were to think of this as BE, initial move up, a lot of consolidation, choppiness, and now it's just had positive headline after positive headline. It's a leader in the kind of the AI energy sector. It's not nuclear, it's fuel cell. And so it's much easier for these companies to actually get this permitted and to be able to do it. It's kind of like a plug and play strategy. And so I think that they're just going to do many, many more deals. And this has earnings sometime in February, but this will likely be a huge gapper on that as well. But I think that we're going to have new all-time highs into that. And so again, maybe we get some corrections along the way, maybe some sideways action, but this is definitely one of the hottest names in the market right now, with catalysts to back it, because these aren't just, BS catalysts. These are things, $500 million deals, $1 billion deals, and they're happening every couple of weeks. And this company is $25 billion market cap or something like that. And so if you look at how they could actually spill into their revenue and earnings over time, that can be very, very significant. Silver and gold, I gave my thoughts a little bit earlier, but this is really the proxy for that inflationary trade. Now, we've had some big mean reversion trades on silver, and now it's just kind of basing. But I actually think that the silver miners are going to far outperform silver from here on out. With actual silver, so like with silver futures or anything like that, the CME continues to raise margin requirements, which makes the spot market or the futures market much more difficult and choppy to actually break out. I think it will break out, but it'll be slower in the futures and the spot market. But I think that companies like AG and WPM and some of these other ones are going to be very significant breakout stocks to watch over the coming weeks, because what happens is that you have silver companies who make their money selling silver. So they mine silver at a certain price, maybe it's $20 an ounce or something like that. And then what happens is that as the price of silver goes to 70, 80, their margins are going, the price of silver at $40 going to $80 when their cost to mine it is $20 an ounce. That can be like a 200% jump in their profit margins. And we're just getting into earnings season coming up. And so I think that's going to flow through, and you're just going to see these companies gush cash. And so that can be a big revaluation. So I think that the silver miners and the precious metal companies are going to outperform the physical metal, especially in silver. So names like AG and WPM are going to be the top watches for that. So that's basically what I want to go over for the week. The stocks and the themes that are going to be on watch are going to be the credit card related ones, whether that's with the actual credit card companies to the downside, or possibly with alternative kind of funding companies like AFRM and Dave, possibly to the upside. And again, it could be interpreted differently. And, you could have some moves to the upside or the downside, but basically they will be in play. And so those are the names that we want to focus on as traders. And also SoFi is included in that. I think that kind of negative sentiment of the government interfering with the private sector is going to spill into healthcare. And so I think you're going to have some downside moves in names like UNH. The housing sector is very much in play with names like RKT and LEN leading. The memory sector is still in continuation mode after that big flush out. I think it has some more to go. Baidu is on watch for some downside. CRML is the Greenland theme. I think that is in play, especially as the government meets with Denmark or with the Greenland officials in the upcoming week. IWM, small caps, I think are the leading index in this environment as you have rate cuts still on the horizon with big spending. That is good for small companies. ONDS, negative catalyst in the drone space. So I think that can have a big mean reversion. BE, a sector leader with positive news, kind of like an episodic pivot, not necessarily all at once, but I think just in general, this name went from being kind of a stagnant one to really entering the AI power trade, and then just a renewed sense of catalyst and deal flow into 2026 now. Silver and gold, we touched on that. I think that this is taking crypto's thunder, but the problem is I think that the spot market is going to start to lag and all the inflows are going to go into the miners. And so that's basically what I want to go over for this week. Hopefully that was helpful for you. That's all I have this week. Hopefully that was helpful. Make sure that you like, share, and subscribe, and also leave a comment on this video if you like this format of Sunday Scam. Again, we spend a lot of time kind of compiling all the news in the market to save you a lot of time so that you can get ready for the week ahead. So if you like that type of content, be sure that you subscribe and leave a comment to let us know what you think. So that's all I have from myself this week, and I will see everyone in Investors Underground in the week ahead. Take care.